Welcome back to Alpha Recap, your post-market rundown from StockAlpha.ai. We're looking at what moved markets after the close and breaking down the biggest signals from today. As always, if you have questions, you can reach us at StockAlpha.ai and use the Q&A feature to ask directly.
Nice to be here. Lots to chew on from today. Semiconductors, energy notes, and another wave of vertical AI stories that kept our feeds busy.
Totally. Let's jump in with the chip story that dominated headlines. Baird reported a broad surge in semiconductor lead times. They didn't give us hard weeks or percentages, but the directional signal was clear. Wait times were rising across multiple segments.
Right, and that matters because lead times are basically how long you wait from ordering a chip to getting it. Longer lead times usually mean demand is outstripping supply or capacity is tight, and that can flip bargaining power back to suppliers.
Exactly. So, what really stands out here is how this helps chip makers with differentiated products. Analysts pointed to names like NVIDIA and AMD as more exposed on the supply side. If demand holds, pricing power and backlogs can lift revenue visibility.
Yeah, that tracks. But we also saw the downside. For original equipment manufacturers, phone makers, PC makers, data center operators, longer waits raise execution risk. Inventory costs go up, and production schedules can slip. So it's constructive for suppliers, cautionary for customers.
Big move.
Not great.
One quick market color that popped alongside Baird's note, there was heavy speculative volume in small-cap chip-adjacent names. For example, GPUS, a microcap, actually finished up about 3.5% to 15 cents on about 238 million shares.
That was wild volume. It's a reminder that retail momentum can amplify intraday swings in these smaller names, even when the core signal from firms like Baird is more macro and directional.
Right. And when you step back and look at this, the missing piece from Baird today was numbers. We need weeks of lead time by segment to model how much revenue and margin impact there really is for any single supplier.
Agreed. Follow-up checks with hard figures will tell us whether this is a short blip or the start of a longer cycle. Management commentary in upcoming quarterly reports will be critical.
Let's pivot to energy. Jefferies raised its price target on ExxonMobil. They cited timing effects, but they didn't publish the new dollar target in the syndicated report. So it was more sentiment positive than numerically informative.
Right. Analysts note that when firms mention timing effects, it often points to near-term cash flow recognition or accounting timing, not necessarily a structural change in the business. Still, an upgrade on a major integrated energy name can move sector tone, especially in yield-oriented portfolios.
And on the new technology front, Turbo Energy secured a patent for an AI-driven home energy and EV charging platform called Sunbox. The report said it's targeting roughly a $12.5 billion U.S. residential EV charging market.
That's a good example of how energy is bifurcating. Legacy upstream cash engines like ExxonMobil, and then distributed software-driven plays trying to commercialize home charging plus storage. IP like this can be a foundation for licensing or partnership deals down the road.
Right, and capital allocation could get interesting if big incumbents decide to partner or acquire startups that have defensible technology or data. So you get both M&A chatter and steady cash flow narratives at the same time.
Which connects to our next big theme, healthcare and vertical AI.
PointClickCare launched something called Study Buddy, an AI platform that promises grant-ready, real-world evidence from long-term care electronic health records. At the same time, Medical Knowledge Group appointed Christy Milo as Chief AI Officer.
These moves are textbook vertical AI. Instead of a generic model, companies are building tools tightly integrated with regulated datasets and workflows, which is what hospitals, pharma companies, and payers actually need if they're going to adopt AI in production.
So, what they mean in plain language is faster, cleaner evidence packages for grant submissions or clinical research, because the platform is designed to produce that output directly from long-term care data. That can speed time to insight, but adoption metrics and partner wins will be the proof points.
Yeah, and analysts will want to see pilot results, any contract wins with big pharma. They specifically called out potential linkages to firms like Pfizer or Merck, and evidence of regulatory and privacy compliance. Data provenance matters a lot when you're dealing with clinical signals.
Interesting.
which is also why hiring a chief AI officer at medical services firms is more operational than immediately revenue positive. It signals intent to commercialize AI-backed services, but the monetization runway can take quarters.
Let's touch on attention flows, Google Trends, and retail indicators. Searches for Dow futures spiked by about 600% to 10,000 queries, and Social Security searches doubled to about 10,000. Not market catalysts on their own, but they show where retail and public attention landed today.
Right. Spikes like that can presage higher intraday volatility for related ETFs or income-focused assets, simply because more people are looking into those topics at once. And when attention concentrates, trading volumes and implied volatility can rise.
MoneyGram also announced a fifth consecutive USA Today Top Workplaces Award. Funny to see workplace news in a market digest, but it can be a long-term positive for operational stability.
That's a nice PR win. Lower turnover can reduce hiring costs and improve execution, but it's usually an indirect and long-term effect on financial performance.
Quick luxury note. Morgan Stanley research highlighted that Chanel was outpacing Dior. Brand-level momentum shifts can re-weight relative performance inside luxury parents and suppliers, so analysts will be watching channel checks to see if this is durable.
Right, sometimes it's a tactical cycle, a hot product or regional strength, and sometimes it's a structural reallocation of market share. Follow the sell-through and inventory data.
Rapid-fire updates. GPUAs finished up about 3.5% to 15 cents on roughly 238 million shares. Jefferies raised its target for ExxonMobil, full price target pending publication. Turbo Energy secured that Sunbox patent targeting about $12.5 billion. PointClickCare launched StudyBuddy. Medical Knowledge Group appointed Christy Milo as Chief AI Officer. Morgan Stanley flagged Chanel outpacing Dior. And Google Trends showed those spikes to about 10,000 queries each for Dow futures and Social Security.
Good summary. A few things to watch tomorrow. Any follow-up from Baird with numeric lead time data, the full Jefferies note on ExxonMobil, early adoption signs for StudyBuddy, turbo energy commercialization updates, and macro headlines or Fed speaker comments that could amplify the retail attention signals.
And keep an eye on microcaps. Volatility in names like GPUS can spill into chip-adjacent suppliers, especially if filings or catalyst news hit.
Final takeaways. First, the chip lead time signal was a reminder that supply constraints aren't gone, which is constructive for supplier pricing but cautionary for customers. Second, energy stories showed both legacy and distributed stories. Analyst upgrades can shift sentiment even without new dollar targets. Third, vertical AI continued to accelerate across health and energy, but concrete adoption metrics will determine commercial impact. And fourth, retail attention remains a distinct risk and opportunity for intraday volatility.
Quick closing thought. Analysts note these are signals to monitor, informational only, not buy, sell, or hold advice. Always do your own due diligence and consult a licensed professional if you need personalized guidance.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with more context and analysis. See you then.